Good morning, everybody. Welcome to the Flow Show. Friday, biggest day since the last biggest day we had ever in the history of anything. They're always the biggest day since. But we've got Mr. Powell to look forward to later on. And what surprises he's going to bring. Okay, you ready? Got your battle boots on?
I'm ready, Ryan. Good morning, and thank God it's Friday. Let's say we are loading for the weekend. The Friday is far from over. Yeah, I'm ready, mate. I'm ready. I'm also ready. I mean, I'm trying to figure out whether, and I think we know the answer, whether there's going to be more replies from Trump than the actual length of of Powell's speech this afternoon. But I kind of think my bet is on Trump there. Hello? We lost Ryan.
Yep, I'm here. I think we should do a sweepstake of how long after Powell finishes does Trump drop a truth bomb.
Oh, no, he's not even going to wait for him to finish.
Well, put your money where your mouth is then. Pick it in the sweepstake. Right, let's get cracking because I'm sure you want to hear our final words about what's coming up from Powell. Right, we're going to start with some data out of Japan, and we had the national CPI numbers coming out, which were there or thereabouts. We've had the headline CPI just pulling back a little bit to 3.3%. Sorry, 3.1%. Which was pretty much as expected on some calendars. We've had another of the core measures, the national core, one of the core measures, which was expected to drop to 3%, but came out 3.1%, so a little bit better than expected. And their other core measure stayed unchanged at 3.4%. So still around that 3%, 3.1% mark, even though we've had a little bit of a pullback in July. Doesn't look like it's moving anywhere fast at the moment, that CPI data. And as we were talking about yesterday, if it stays up there into the end of the year and all trade deals are done and dusted and on a bit of paper, then that might give the BOJ room to drop a little hike on us. Whether we get any hints or not from Mr. Ueda at Jackson's Hole, we will have to find out tomorrow on Saturday, because that's when he's speaking alongside Bailey and Lagarde. Germany, they went worse on their final GDP numbers for Q2. The flash number came in at minus 0.1, and it came in at minus 0.3 to finish the quarter in Q2, so still a lot of work to be done over there in Germany. Morgan Stanley, though, they've changed their rate cut expectations for the ECB. They now see cuts in December and March versus their prior forecast of September and December. So they've pushed their cut calls out for the ECB out a bit further. A little bit of data that we got yesterday from the UK while we was on the Flow Show just highlighted pretty much what we saw in the PMI. The industrial trends orders coming in much worse, was expected to be less crappy at minus 28, but came in worse at minus 33. So this feeds into all the manufacturing side of things. Selling prices, though, did ease a bit, coming in at 9 versus 21 previously. Then into the US stuff, we've got jobless claims, which had a little bit of a tick up on the headline number, up 9k to 235, 9k more than expected, 11k over last week. Continuing claims just edging up a bit to 1.97 million. This is still not flagging any big problems, but maybe we'll start to see a bit of a grind up happening. If we just look at, as you can see, pretty flat there, but if we come into a 2-year, we've just got a bit of a slow grind up, okay? Unless we're trucking over 2.5 million, unless jobless claims are dropping at 400,000 a week, there's still nothing to worry about. But maybe if it's a bit of a grind, shows a bit of a trend up, that will feed into what the Fed think about regarding rate cuts. The Philly Fed was out as well, was expected to go in positive, came in a little negative at minus 0.3. Some of the other components, though, a little bit mixed. CapEx came in strongly at 38.4. Unemployment softened to 5.9. New orders dropping minus 1.9. Prices paid, though, going up 66.8 from 58.8 previously. So pretty much par for the course. That data K from the Philly Fed, inflationary pressures, a little bit soft on the jobs numbers.
Yeah, not really a lot to comment about. Okay, we could argue that those numbers, the manufacturing is still not where it wants to be, but once more, are they going to succeed the U.S. administration to bring it home? Then those numbers should gradually improve as well. I'm having a hard time to find a line in those manufacturing data right now. Still need to see how it's going to evolve.
Yeah, exactly. But then we got a bit of surprise from the PMI, which was very, very strong. Manufacturing, when you look at that, was expected to drop a pip, moved into expansion, 53.3. Services as well took off. Although it was less than last month, it still came in at 55.4. Again, the underlying details in that, no real issues in the jobs market, in employment, strong inflation pressures there as well. Pretty much what we saw in all the other PMIs, Kay, particularly regarding prices and the like. Yeah. So there's been a bit of divergence between this one and the ISM. But, you know, it's still, there is nothing falling out of bed in the US.
No, exactly, and that's what the market saw yesterday as well. It was extremely quiet until we really had those data, and then a couple of comments there from the Fed speakers, which you will mention, I'm sure. Sorry, yeah, still nothing falling apart. So that's the main theme there, and face value of those numbers, although you can hardly compare economies one for one, but those numbers are still higher than the Europeans.
Yeah, still trucking along, and I mean, surprising that manufacturing, because it has followed the rest globally. We know manufacturing's been in a soft spot. I mean, it doesn't even show it there. Don't know why, but I can tell you that very, very few times over the last maybe 3 or 4 years have we seen a positive number in manufacturing in this data point. So trend wise, this may yet just prove to be a one-off, but it could also be the start of a trend higher. So we'll keep an eye on that. We had existing home sales also in the positive, coming in at 4.01 million from the 3.92 expected. So all looking good there. House prices staying afloat as well. No problem there. And look at the good old, one of my favourite numbers, Eurozone consumer confidence. For all the positivity, it got worse. And this is a chart I love to show now and again. there's the zero line, there's the flat line. Put it on max, you can see how many times Eurozone people have been positive in the whole history of this report, about 4 times. Love that chart. Always been negative. Anyway, moving on. As Kay mentioned, we did have a load of Fed heads as Jackson Hole kicked off. All the sideline interviews and TV appearances started up. Fed Schmidt, he's head of the whole deal over there in Kansas City, running the Jackson Hole thingy, said policy is moderately restrictive and appropriate. Says we're not in a hurry to cut interest rates. We have to be careful about what lowering short-term rates would do to the inflation mentality. He says the risks on inflation are higher relative to the job situation, and that's an important line, because that's something we'll need to watch out from Powell, how he addresses that balance between inflation and the jobs numbers. Bostic, he said that 50k to 75k is now closer to the job market's monthly placement rate, i.e. the sort of break-even rate that we're looking at in terms of that. It was up earlier in the year around about, I think it was about 125, 150,000 K, something like that. So it shows it has come down a bit.
The what, sorry?
The sort of break even for the NFP.
No, it was already running below 100K. I guess it is maybe the migration and things, or the reduction of it may have shown it number, but that's a lower number than what the market was always looking at, which was around the latest were kind of somewhere around the 80-90K mark. Some rounding it up to 100, but no, this is actually a relatively low number, and already more than one Fed governor has been mentioning this number. So either they have been looking over each other's shoulders or doing their homework together, but that's a pretty low number, huh? 50,
Yeah,
75.
Maybe they've got a moving average running on the jobs numbers, but it's not surprising. I mean, that's been the story from a lot of Fed heads. There's no firing, it's just hiring that's slowed, and that's why we're not seeing big negative numbers on the NFPs, taking out that revision wobble aside. But anyway, yeah, and until we start seeing some big negative numbers, they'll take even a 10K positive if it keeps going. But anyway, Bostic is still eyeing one rate cut for this year, but says his forecast is in flux, so he's wavering a little bit. But he says he's not stuck on anything when it comes to monetary policy. Fed's Hamac says it's important we maintain Fed's Hamac says it's important we maintain modestly restrictive policy. Says both sides of the Fed's mandate are under pressure. Says wholesale costs are going up, but not necessarily being passed on. Says the biggest concern is inflation too high and trending up. We'll view the jobs data in the context of broader economic changes, but does not see an imminent case for rate cuts based on the current data. Fed's Goldbeast says September is a live meeting, and that the Fed has been getting mixed messages on the economy. The most recent inflation data wasn't great, but the Fed still has time to take in more data. Fed's Collins says rate cut may be appropriate soon if the labour outlook worsens. The EU and the US finally put out a joint statement, pretty much not finalising, but put into paper all the details of their trade deal that they reached last month. I won't go through all the bits and bobs, but as our Rumi Mark said, we'll have to see how much of that actually comes to fruition and whether it's worth the paper it's not been written on. Germany's Auto Association, the VDA, came out saying it's a good sign that the US and EU have finally agreed on a joint document regarding all the tariff stuff. But says that the EU must act fast for tariffs to apply retroactively from the 1st of August, saying that companies urgently need clarity and planning security. We've had another Fed candidate piping up. Bully Bullard says he's spoken with Besant about the job. We'll be speaking to him around that Labour Day when they all have their interviews. It says rates are high right now. We can cut 100 basis points into 2026. It says the Fed can do more in 2026, depending on how the data comes in. I do think they'll cut in September, and that the recent minutes are stale and not to be paid attention to. He's also pretty bullish still on the economy. Kate, one question I've got for you about all these prospective new Fed heads. They're all pushing to say they're ready to cut.
Yeah.
Now that's all well and good, but really, in order for them to cut, which would please Trump, it would mean the economy or the labour market is falling over, which isn't good news for Trump. So he's in a bit of a damned if he does, damned if he doesn't. He could get his rate cuts, but then he's not going to like the economy being the way it is and the reason for rate cuts.
being Trump, he's going to look at the equity markets and the funding rate for the U.S. Treasury. I think he'll if the jobs market rolls into contraction, he's probably going to blame it on Biden. So for him, really, the main thing is going to be the cheaper funding for his big beautiful bill, and the equity markets where he can then, if the equity markets move higher again on the back of it, on the back of rate cuts, it's going to be a victory lap. As unfortunate as it may be on a human basis, I think he'll gladly shed a few 100,000 jobs if it brings the stock market higher and the funding rates lower, and then Besant will start to do a victory lap as well. And yeah, unfortunate, but that's the way money functions. Well, that's my opinion anyway.
Yeah, but what will happen with markets? Because markets will be seeing worse data.
Yeah,
stocks may be rallying, but the dollar's probably going to get
dollar will
a
get
kick up the arse.
yeah, the dollar will get a slap around the ears. Definitely, definitely. I mean, if that's the case, and even if it would be, let's say, not even waiting for the new one, but even if, and we don't know whether, I mean, it's probably not going to be today, but even if Powell starts to cut rates because the jobs market is rolling over, it is still going to weigh on the dollar. I really think it's going yeah, the dollar will trade lower if the jobs market is the reason why they're cutting rates. But then a very sanguine equity market may hold up because there's still money in the system, right?
Yeah, exactly. And I think we're back in that situation where if anything happens to the economy, is it going to be a soft landing type thing, or is it going to be a crash landing type thing?
Yeah, exactly. I was like, for a very long time, I was thinking about the correlation between job market and equity market being positive correlation. So that means weaker equity market, weaker jobs market is weaker equity market. But we've been, or I've been told otherwise. If you look at how the equity markets are behaving right now, so we will have to see. I'm still not ruling it out, but if we start to see rate cuts because of the job market, at least the dollar will get a slap around the ears.
Yeah, very much so. Right, moving on to Russia-Ukraine stuff. Lavrov, the foreign minister, has been out and about again, trying to drum up that division between all the parties, EU and Trump and the rest. He also says that Ukraine directly shows it is not interested in a sustainable and long-standing settlement. That was after Zelensky's comments yesterday. Then he said the so-called coalition of the willing, or coalition of wankers, as I like to call them, is trying to undermine the process made at the Alaska summit. But he did say that foreign troops in Ukraine are unacceptable for Russia. So we've got one red line out. And then another thing that we've spoken about says when it comes to signing something, the issues of legitimacy of the Ukrainian representative will have to be resolved. This was, as I mentioned yesterday, Putin has never recognized Zelensky as the official leader of Ukraine, and that looks still to be something that's involved. Now, an possible interesting truth bomb was dropped by Mr. Trump yesterday. He had a bit of a rant. He said it's hard to win a war without attacking an invader's country. Long story short, he mentioned that Biden would not let Ukraine fight back, only defend, and that there's interesting times ahead. Now, maybe 2 and 2 plus 5 on my behalf, but if you read between the lines there, you could think that Trump might be moving towards a situation where if these talks fail, he will allow Ukraine to use arms that are provided by the US to attack into Russia. That's been something that's been a red line drawn by the West in terms of what Ukraine can do with the arms that they've been getting. that they do not use them to directly attack into Russia. But as I say, I might be picking something out of nothing, but that's the first thought that struck me, that if things go tits up in these negotiations and nothing's done, maybe Trump will take a different stance. What do you think about that? I mean, you've always got to take his truth bombs as with a pinch of salt, ranting, but you can't rule out something like that, can we?
You've seen that yesterday, actually, Russia had a very big drone offensive, and they actually hit one US-owned company as well. That may be a bridge too far as well for Trump, and perhaps he finally realized what's in the east of Ukraine. If there would be a forced agreement to give up that part, because there's a lot of minerals and stuff in the ground over there. So yeah, maybe his how shall I say, military counselors have been finally whispering into his ear, and he listened to them. It's the situation has not by any means improved since their meeting last Friday between Trump and Friday night between Trump and Putin. Putin really came out of there like as if nothing changed, and the demands were even stronger than we have heard before. So no, I think it's the situation is not good, and perhaps now Trump starts to finally realize it.
Yeah, and he actually said that in comments following up to that later on. He said on Russia-Ukraine, we'll know what's going to happen in about 2 weeks. And then said after 2 weeks, we'll have to maybe take another tact. So again, that's a little bit of a hint. And that US firm in Ukraine was a bit of a big building. It wasn't like a little, office block or office within an office block. It was a whole big unit.
And in the meantime, Ukraine is bombing or droning, should we call it today, Russian oil facilities and etc. I mean, the situation is really not improved at all. Also, those Russian comments afterwards, about the so-called security of Ukraine, saying that the Chinese should be involved, and even the Russians themselves should be involved in Ukraine's peacekeeping, and but for sure not the West and nor NATO. I mean, it's just it's not going to fly. Not right now.
Yeah. So a sticky situation we're in still at the moment. Right, that's that from that. As far as all news goes, unless you've got anything else, Kay?
No, let's dive into the hole.
Let's get a jump in the hole. Get in the hole. Right. So there's been lots of talk about it, so I'm just going to try and be brief, okay? Firstly, try not to get sucked up into the razzmatazz of it, okay? There's a lot of commentary coming around. There's a lot of excitement coming into this. Yes, it's probably going to be volatile, but you've got to be careful, okay? This could be a volatile event, okay? It's not definite, but it could be, and it's likely to be a very volatile event. So if you're trading this, you don't want to be pissing around right now, trading 20 pip scalps and getting into trades with 30 pip stop losses, okay? Today's the day to set your stall a bit wider, look at your bigger levels. You probably want to be thinking about not trading any of the majors within 100 pip range of wherever the price is going in. So set yourself wider, see if moves happen, if they hold, if they make breaks, if they hold those breaks, or if they quickly reverse those breaks. As always, keep yields on the chart as well and use them for a guide as to whether moves might continue or halt or even reverse. So that's going to be very important. As for Powell himself, again, look at where we're at. Look at where the fundamentals are at. The fundamentals are saying, yeah, we had a wobbly jobs market, but the rest is still doing okay. Is he going to panic over one jobs report? Who knows? He's already said, as Kay's mentioned previously, that any quick turn in a jobs market may get them to act. So we know that, okay? But does that jobs report tip him over the edge? We know the economy is still doing okay. The market, it's going into this pretty dovish. Okay, we're still pricing 80 odd percent, 75, 80% probability of a rate cut in September. So the market is leaning dovish. So you know the price risk is if he doesn't give that. What's Powell likely to do? I think he's going to walk his middle line. He's going to be attentive. I reckon that word will come up a few times. Attentive to what's happened in the jobs market and what may happen, but equally attentive to this higher inflation that we're seeing, and that it's trucking above target now for over 4 years. Okay, it was coming down to target, it stopped going down to target, and now it's moving up away from target. So he has got two sides of the coin to play here. And it's going to be a question whether he gives an explicit nod to September. That's the first thing. And then what he potentially suggests or infers for the rest of the year. So we're at a big inflection point, not only for the September meeting, but what Fed policy might be like for the rest of the year and going into 2026. And alternatively, he may say nothing explicit about anything, just give some loose remarks, and even that's going to be disappointing for the doves. So don't get caught up in all the razzmatazz. Sit yourself back a little bit, let the noise happen, work it out, analyze it, and then look at what you want to be trading as far as that goes. Has the picture changed or has it not? Kay, what's your thinking, mate?
Yeah, I mean, let's just a quick word about what you said at the start, which is extremely important. Remember what happens over FOMC press conferences, right? How Powell speaks. He walks both sides of the line, and he usually starts with one theme, then moves over to another theme to then end up somewhere what he really wants to say, or back in the middle. So if you have positions, a 30 pip stop loss is a near guarantee to be executed, okay? Whether it's long or short, it really even doesn't depend. It really doesn't matter. So, because we could, if you just look at the euro dollar, for instance, which is at 116 the figure, you could put a stop at 116.35 or 115.65, whether you're long or short, and get done both sides actually over the course of his speech. So that is one thing. Now, what I think is that he doesn't really have too many reasons to be dovish unless he wants to prove he wants to make a point in the last FOMC was that inflation was still more important and sticky and whatever. He may start to talk about that jobs thing. I guess that's a good possibility. And then there's something going on in and now I see more debates about it, about could he announce something about inflation, either an even more flexible approach, meaning because they have, like, I mean, AIT, they call it. They have this already in place, really, because as he said, the inflation should continue to go into the direction of 2%, but the 2% is not a fixed one. So there's a few possibilities there, whether he goes even more flexible. But then people also, I see them say, like, oh, he can go a lot more hawkish and say, like, no, we are going back to a fixed 2% inflation target, in which case, forget about rate cuts, because we are way above there, right? And that would also be a hint. So there's a few possibilities that that come over. There's little reason for him to be very dovish. Actually, I was just looking at this probability of the cut. It is gradually getting scaled down. Now, talking the way he talks doesn't necessarily need to mean that we need to price out rate cuts. I mean, even if they go 25 BPs over the next meeting, because of the jobs market showing signs of slowing, he may leave that door open, and in the meantime close the one on 50 BPs, for instance, because that would be now, in current context, completely out of line. But it's not because we still can get a 25 BPs in September that the dollar has to go down also, right? Because it's still going to be a high yielder relatively to stuff like euro and other currencies apart from the sterling. So I I'm just going to look for any surprise, really, whether it is more hawkish or more dovish than walking those both sides of the line. I have to screw back a little bit on my potential dovish surprises because of the data, simply the data that we had of late. So yeah, to me, the dove an overly dovish land would be rather the surprise, and then I'm taking perhaps a little bit the other side of what you're saying, Ryan. But yeah, I think the hawkish side may be. Yeah, too hawkish would be a surprise as well, but yeah, he's probably going to be undovish, as we say. So leaning towards the hawkish side. That's about it. But again, I think the more important thing for us trading this is be aware that he can walk both sides of the ale.
Yeah, yeah, and as I said, also it's going to be just as important what he might not say as opposed to what he might say. You know, the market is leaning dovish, so if they don't get enough out of him to cement that September hike, you're going to see a reaction either way. But what the thing
Yeah,
is,
he could actually completely be mum about anything in September. He could.
well, that's what I was just about to say. Everybody is looking at this, and we're just as guilty as well because we've got to look at the risks. Everyone is looking at this like it's an FOMC meeting,
Mm.
or you know, a
Because of
Humphrey
his
Hawkins or
story.
something like that. What if he just pays a couple of line lip service to the economy? The economy is doing fine. We're still watching and waiting, and then moves on to talking about a complete load of rubbish.
Yeah,
And that's all we get on the economy and policy. What does the market do with that? Is that yet again another bit of disappointment for Doves?
I think so. I think so because the market is expecting it because of what we saw in that job number in July, end of July. Oh no, beginning of August. Sorry. I mean, if that would have been zooming along, probably nobody would have spoken about Jackson Hole because he was anyway going to be relatively hawkish if the jobs numbers would have been better. Now these jobs reported, especially then the revisions have really pumped up this meeting because historically sometimes the Fed heads or other central bank heads announced something. It wasn't specifically in Jackson Hole, but I vividly recall Kuroda during a Davos meeting announcing QE, so or YCC or something, and it really sent a shockwave through markets. And but it could be Ryan that is just all pumped up and that he's just talking about the wonderful weather in Wyoming, you know.
Yeah, yeah, very much so. And
That would be a bigger disappointment for the Doves than for the Hawks. Huh?
yeah,
Let's be
exactly.
clear about that. If it doesn't say anything, that would be a bigger disappointment for the Doves.
Yeah. So there's going to be volatility, whatever happens with this meeting, which you know it's going to make it good for trading anyway, because it's better to have some two-sided vol than a bore fest. So, but you need to keep safe over trading it. So, set yourself wide would be my advice. Right, let's get into looking at a couple of pairs. I'm going to leave Aussie. Well, I know a couple of you look at Aussie Kiwi, but I'll only remark on this quickly. It held where it needed to yesterday after coming off that high that it made. We're back up towards that high. So we get to see how much is in this high and why people decided to sell it around the 60s, 70s, and whether it's going to continue to go up or whether that's it and we're going to see a bit of a top forming. So this one is still looking bullish. It's doing what it needs to do. It's broken. It's held the break where it needs to hold the break. It's doing a little bit of holding here as well on this 110.50s. As you can see, it was a bit of resistance again this morning, but it's gone and now it's holding. If this just nicks a high by even a few pips, it will keep the momentum going and suggest we're going to be running up to 111. Or if it fails here, then we've got to be careful in case it goes on to then start breaking some of this support. Probably the 110 is the final line in the sand. Dollar yen, a lot of people probably looking at this, and I'll probably better looking at a nice clean chart. Again, look wide. We're right up against what's been a pretty solid level quite often around this 148.80s, 149s. Okay, so we've been up here. Let's put on a bit of a wider one. We've been up here plenty of times. This has been a solid level going back, going back, going back. Okay, it's not going to matter. Being 10 pips, 20 pips away from it going into Powell, it's not going to mean anything. It might mean something if we move away and then come back to it. So if we break up and we get a dip, does it hold it or does it not? But otherwise, I probably wouldn't be looking at much until 150 or this other area up here, 150, 80s, 151s, which again has been another pretty solid level that's seen a lot of action. So that's the sort of top side area I'll be looking at in terms of this event. I'm not looking at stuff at 149.20s or 148.30s, nothing like that. Downside 147. It's broken quite a few times, but the important price action is it hasn't held the breaks for any real length of time. Okay, so we've had little dips under, we've had breaks, it hasn't stayed down there for long. Okay, so from here, 170, 180 pips, probably going to be a consideration on any big news, but this is still a pretty volatile pair, so you've got to be expecting maybe some blow throughs. So maybe even I'll be looking at 146 as a possibility of somewhere I would maybe look to trade depending on the news. But again, anything in the middle here, I'm not even going to open my eyes to until after the event and we know what's coming. Dollar CAD's in a similar position as well. We're having the break again. It's working nicely. It's respecting the levels. We faffed around here for a bit, then we held it. We're getting back above 139, trying to hold it up here as well. If we do that, then we're going to kick on. I've got an intermediate level, 139.29. Probably not something I'd trade, but something that's seen a bit of action historically. And then we've got a bit of a zone up here, 139.45, 60-ish up here to keep an eye on. The big stuff, though, is higher up. It's into this 139.75.80 and the 140s. Obviously, the 140 is going to be a big psychological level, but it's also the 38.2 of this downtrend at 140.18. So this is going to be the first big test of this trend and this move up here, this bounce. Okay, we've got a bottom in play. Is it going to continue? Or is it going to find resistance here and then it's going to keep the downtrend in play? You can see even before you put this fib on, this was a level to respect where we've seen some action going on previously. A very, very solid resistance point after this breakdown. Okay, so this is going to be a big level, whether there's a fib there or not. So you need to keep an eye on that. But again, Powell, we could be up there and blasting through, or we could be 150, 200 pips lower. Depending on what comes up. So again, I don't care. All these numbers in the middle. Okay, that one down there, 137.20, 35, which was a zone that held after we got this move. That's probably a good an area that you want to look at. But otherwise, keep it wide. And as Brand said, you can, if you want to trade some of this stuff, then lower your trade size, maybe widen your stop so you don't have to change your risk. But I would still bring your risk down a little bit and just try and adjust to the conditions that you've got in play. Alternatively, if you want to keep out the dollar, then keep your eyes on some of the crosses, the non-dollar crosses like Euro Sterling. Still looking like it wants to hold in the zone, but we're on a bit of pressure on the downside. The reason this might move significantly is if we get a big variation between what happens in Euro Dollar and cable, because we know they can move at different speeds. So we're in an uptrend. we've held this support 86. Okay, if cable moves more than the euro, and if it means that cable's going up faster than the euro's going up, then you're going to see this coming down. So if it's a speed move that we're seeing in here, you can probably rely on some of the tech levels, and particularly if we get a move down to this 86 level, I'll be more inclined to add back to my position or buy it fresh if I wasn't in the position on a speed move than I would be on a more fundamental move. So set yourselves appropriately. Other than that, it's all sheets to the wind. Dollar MEX still, as I've been mentioning, different picture to dollar CAD, even though we got the similar support structure down here. It's not pushing on. It's not getting up through some of those high moves. So this 1850 is still very much in play and still very much at risk. Possibility that it could get a test or even a break over Powell. But if Powell's pretty dovish and we come down here and we're holding and we can't even get down to that 1850 or tests it and holds and holds and holds, that'll be another signal that this support at the bottom is looking firm. And that might be something I'd look at to add back to some of my positions. Kate, right, I'm going to bounce it over to you, mate, for your eyeballs.
Canada mix, mate. Canada mix. Short Canada mix. Well, that's about what's happening, right?
Yeah, pretty much.
Yeah. What are we looking at? Okay, just on the euro dollar, but we know, and we've been saying everything. Every level now needs to be taken with a pinch of salt because algos could drag it through and then bounce, or drag it through and then cap. But basically, the closest one on the euro dollar are 115.60, then 115.20, and this will be the 115. Obviously, will be very psychological. If ever Powell is very hawkish in the end, we could actually go and have a look at it. This 100 pips can easily be done if he gives us, or if he gives the market enough of a bone to chew, obviously, in one or the other direction. And then if that would go, then this prior low here is going to be relatively important because it's been a zone of activity as well. It's going to have to be extremely hawkish for it to drag it down below 114. But a really hawkish land, I wouldn't rule it out, and not per se today in one go. But maybe over the course of the the start of next week or so, could be the case as well, because obviously it's not only today that the markets are going to move, but the markets on a Friday can set up for what's happening on the start of the next week as well. If we get a bit of a dovish slant, meaning that it doesn't, but he will have to say it, that it doesn't close the door on anything sizable in September, because he shows that he's a bit worried, or more worried than he was on the US jobs market. And we are going to probably see a test of this 116.50-65, potentially, depending how dovish he is, back up into the 117s. But it's going to have to be an extremely dovish one for this to break here. 117.5, 117.80. It's really going to be a big zone. So I would say start with like 100 or whatever pips moves if he gives the market enough of a bone to chew on, and then reassess what's going on and evaluate exactly what he's been saying, if he gave the market enough to continue to run. And that's probably, as Ryan already mentioned, going to be decided what's going with what is going to happen in the bond market. Okay, watch everything from the 2s to the 10s. I know that people always look at the 10s, but if it has to do with employment, it's closer to home, so you don't look besides this 2-year, 3-year, 5 years as well. Okay, cable, yeah, we're holding here, and this is the 23.6. Thanks, Brian, of what has been going on since the start of the year. This is roughly holding for now. But again, below, I think 133.65, 70, 75 is going to be important. If Powell is hawkish, we're probably going to have at least a look at it. And why not even go for a walk below, in which case there are a few levels in between 133, 133.15 to bear in mind. But again, same as in the euro dollar, same as in any pair, it's going to depend on how the market perceives this for the bigger move or the potential of a bigger move, in which case there is maybe even a case for dropping even lower if it's really hawkish. But then look at this 1st of October low. Look at, and that was before we did the high, but look at this low here, also around 130, 140. And then look at what happened since the start of the year. This is 13th of January. This is the high that we visited the 1st of July. The 38.2 of this move, which is usually a big fib, is 131.40, okay? If ever over the course of the next few sessions we are going to get there, this is going to be a do or die level for the cable, okay? I personally I don't think, because there's like, what is it, 270 points away, which is already a big move, which would be a 2% move from where we are. So it may be too much for a day like today, but think of it in terms of next week perhaps as well. If that ever gets tested, watch out, okay? Because that's going to be big decision time for the cable. Now, what if he goes on a more dovish walk? This is obviously far too close. Then you look at what's happening here, 134.60, 134.90, that little spike here, that could already be enough if it's not really too dovish. But I'd argue, even without already looking at these highs, which will obviously be a big level if really Powell goes on to the dovish tour, which would be a big surprise. But I think even already, if we start to break above 135, sorry, 2035, 2040, that it's going to perhaps not stop at this level this time. Okay, this is your 135.40, which is a 61.8 of the whole correction from the 1st of July. So I think really this one is maybe even more important than these two ones. If it gets back above there and holds, that's your door to 136.5. But one step at a time, obviously. What else? Strange little action on the Aussie, even if we are still a few pips. Where we were talking about those commodity currencies being under the cush, underperforming, laggards, you name it, on the way up compared to what euro dollar was doing or the cable was doing. For instance, yesterday Aussie dollar actually didn't move, and that was a bit strange, I found, where the rest of the dollar pairs were going higher. So in this case for Aussie, even lower, where it lost quite a bit before, may hint that there is a bit of interest around this zone. Okay, so this could be, and then we're talking in case that Powell is not too hawkish or so, this could be a nice indication here. 65, call it 10, 64, sorry, call it 1020-ish, okay? If we are above at the close of the day today, it may be important enough, okay? So this is an interesting level to watch. Obviously, if the dollar continues to rally, people are going to look at the 63.70, the prior low, and then here as well, level which could end up being rather important. This is the 38.2 of the latest sharpish rally in the Aussie dollar. This comes in at around 63.5. 63.5 is going to be important this afternoon. Okay, so to rally, what needs to happen? Well, 64.40, 45, but that's a bit close. For comfort, I think really here 64, 65, 70. That's going to be the first barometer, and then obviously 65 the figure. If ever we get a close back above 65 the figure, that will mean that we are also erasing those prior lows, spike lows here around 64.80. That should, in theory, be quite a bullish picture. But that is in percentage terms over 1% away from where we are. So this is already quite a sizable move if you look at it percentage-wise of a currency pair. Okay. Kiwi, not a lot to say. This is actually still looking more bearish than the Aussie. We are on a bit of support here. We know this zone here has had a bit of interest, 58 and a quarter down to 58 the figure. We are right now trading on 58 the figure. In case of a kind of a hawkish one, this looks like having more potential to continue to trade lower than the Aussie dollar, for instance, right now. Obviously, Ryan was already looking at the Aussie Kiwi, which is a part of the explanation. But even if you look at separately the pairs, it does look a bit. It does look more fragile than the Aussie dollar. Just on looking at the picture that we are seeing right here and now. So 58 the figure, probably on the close, relatively important there. Let's move on to what's happening in the metals as we usually do. Gold 33.30, bang spot in the middle of that trading range, traffic zone. You call it as you wish. We are waiting for what Mr. Powell are going to say. 33, the trend line is coming in a little bit higher than I would like now at 33.15. I would still say those levels here, 33.08, 33.10, added 33, the figure on there, that is probably going to be the zone that we watch to the downside. If ever we are seeing a hawkish Powell with a hawkish repricing on the interest rates, yields will play a role in both metals, obviously. Then we could see a move back down to 32.70. Why not that double bottom that we had here, or the double low, I would say, around 32.45, where I think it's going to be quite important because one try, two try, we've seen very solid bounces from that level all the time. A breakthrough would potentially see us then trade quite a bit lower. What happens to the top side? 53, 58, and then that 70, 75. And yes, we are talking about this 34 figure 10, which is going to be important, obviously, but don't only look at what Powell is saying and giving us this afternoon. Obviously, it will be the bigger driver on the day. But we also spoke about what's happening in geopolitics, and it's still not improving on the war side either. And don't forget that gold is still a hedge against everything that can go badly. So take a look at the combination of it. Imagine that Powell gives us something more dovish than that. The market will probably buy this one more than perhaps silver today, if that is warranted, because of the risk that we still have on the geopolitical side of things. Okay, so if we get above this 70, 75, we may have one of these days where the market goes a bit panicky and just takes it straight away up to that 34.10, maybe even 34.20. We have seen $100 moves in gold. Okay, but I would say that it has to be a dovish Powell, and then we will have the potential for going higher. I will keep a very close eye on gold today, and a very close one, and it's going to be my kind of pair of choice or instrument of choice in case we get a very dovish one, which would be also a surprise. Silver holding also, we could say, range, but it's still holding a very positive picture here. Only back below 37.40. We can then go and have a look again at what's happening in lower levels, perhaps 36.80, 98 this time, or perhaps even low 36s. But again, in the longer term, we are still extremely bullish in this instrument. Dovish Powell, yes, 38.5, yes, 38.70, and we can continue to push through. But again, maybe just on the day, gold could be the bigger mover. It's just something that I'm thinking about. Ryan, with that, back over to you, mate.
Thank you very much, sir. Good stuff as always. And that closes off the week, boys and girls. I hope we've kept you entertained and keep your brain boxes ticking over. Still the big stuff to come. So, yeah, take care, folks, is all I can say. Be safe. If in doubt, stay out. Markets will be here after Powell and for a long time to come, Trump permitting, of course. So have a great day. Have a great weekend. The no flow show on Monday due to the bank holiday. So we will see you on Tuesday. Have a good one, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.